everybody, it's Maureen Lein, your local lender with rate, here with this week's Mortgage Minute. Today is Wednesday, December 3rd. So the highly anticipated ADP report came out for November, and it was much weaker than expected. Instead of the projected job gains, the economy lost 32,000 jobs. And when you look at the last 4 months combined, we've seen 17,000 job losses. This really shows the direction the labor market is headed. Small businesses were hit the hardest, shedding 120,000 jobs, while medium and larger companies showed modest gains. Wage growth also cooled. So job stayers saw wages rise 4.4%, which is slightly lower than last month. And job switchers saw a more notable slowdown from 6.7% to 6.3%. So the switching premium has dropped to its smallest level in 5 years, which shows companies aren't competing as hard anymore for their workers. And what about consumer spending? Well, Black Friday spending hit a record $12 billion online, which is up 9% from last year. We don't know how much of that is inflation, shifting habits, or actually increased spending, but I can tell you most of it likely went on credit. And credit essentially pulls future spending forward, which can then limit consumer demand down the road. Mortgage applications, well, the MBA reported mortgage rates moved slightly lower from 6.4% to 6.32%, and now sit about 0.5% below where they were a year ago. Purchase applications were up 3% for the week and up 17% compared to last year. Refinances were down 4% week over week, but remain more than double last year's levels. And what about the rental market? Well, Apartment List's November rental report came out, and it shows that new rents fell 1%. This is the fourth straight month of declines. And year over year, rents are down 1.1%, and we've been seeing annual declines for almost 2.5 years now. This is being driven in large part by high vacancy rates. Now it's 7.2%, which is the highest on record, as well as longer days on the market, which rose from 34 days to 36 days. What happens when units sit vacant? Well, the landlords cut prices. This trend should help push inflation lower in the coming months. And so what are we going to be looking at next? Well, we're not going to get the BLS jobs report for October and November until December 16th, which is after the Fed meeting. This may be a good thing because ADP's weakness is mostly in small businesses, and the BLS birth-death model has always been overstating small business jobs creation this year. So that is this week's Mortgage Minute. And in a nutshell, job growth is weakening, wage pressures are easing, consumers are spending, but likely on credit, rents continue to fall, rates have ticked slightly lower, and demand is showing signs of life. This all sets the stage for a very interesting Fed meeting next week. So I look forward to speaking to you all then, and please remember to like, share, and subscribe. Take care.